All right. Hello, everybody. Daniel Research here, and boy, oh boy, we've had the Fed meeting yesterday. So let us cover what happened, what the market reaction was, what is next, and so on. All right. So the Fed cut its interest rates by 50 basis points. So actually, most of the banks, most of the analysts were wrong on this. Like only one big bank said that there's gonna be a 50% cut, and most of the analysts said there's gonna be 25% cut. All right. So what happened on the presser? Well, the Fed, Jerome Powell, said that the economy is fine. There's no recession. Everything is okay, right? The labor market is strong, the economy is growing, and there's no worry on the horizon. Now, recall what I said on my, not the last technical video, but the video before that. I said that Powell is gonna try to convince markets that everything is gonna be fine either way, right? This is gonna be his first and foremost important thing that he has to do. Why? Well, because if the market believes that if the Fed says that there's gonna be a recession, that there's concerns about a recession coming, then what is gonna happen? Well, the recession is gonna happen instantaneously. Okay? So if Powell said, I am worried about the economy, I'm worried about the labor market, guess what's gonna happen? The market is gonna crash. The recession is gonna self-fulfill itself because of this. So what does the 50% basis points tell us about the economy, actually, the economy, and not what Powell is trying to convey to the markets? Well, it's saying that we are okay. I was trying to not say this, but there's really no better way to say it, okay? So the fact that they had to cut by 50 is pretty significant. And this says that they are seeing something that most people aren't. Like if you go on Twitter, everybody is bullish. Yeah, let's go 50 basis points. Well, not really, right? Because what is that saying about the economy? That we are expecting a slowdown. And if you guys recall, I posted a '07 article here, CNN Money. Here's the highlights. This was in the video about the Fed fundamentals before the meeting. Now I'm seeing on X a lot of big accounts are starting to pick up on this article and they posting this article. Well, I posted it quite before they did, right? So if you guys were watching, you knew this beforehand. And the thing is, in '07, it was the same thing as today, right? It was a surprise cut by 50, right? And the market was wondering whether the cut's going to be 25 or 50. And then some investors thought that the chair would take a more cautious approach and not cut rates by such a large margin, because a half point cut could signal the Fed was acting out of desperation to save the economy. Okay, so what happened after that, we all know, big crisis, right? So in the 2000, same thing happened. They could buy 50. What happened? Dot-com burst. Okay, so it's not all roses, right? But what was the market reaction on this news? Well, initially we had a pump, as expected. I think in my technical video, my last technical video, I showed you that we could expect something like this, right? And this is exactly what happened right here. We saw initial pump, then dump, right? So on the Fed day itself, it's obviously an overreaction, and how we can say it is like the Fed day, overreaction. Day after the Fed, which is today, is reaction to the overreaction. So today markets are up almost 2%. Nasdaq up almost 2%, right? So until Friday, we can't really know the real reaction. But the thing is, in the short term, lower rates might actually be bullish for the markets, right? Free money, let's go. Not really, right? Powell actually did quite a bad job of convincing the markets. Like he tried, He couldn't convince me though. Like at one time, he even said, my thesis on the employment reports. He actually said the exact same thing. If you guys recall one of my videos, I said that the NFP video, that first we see stopping of hiring and slowing down new hiring before we see the firing and the recession. And Powell actually acknowledged that, right? He said, we are seeing this slowing down and the next step is the firing, so we're trying to avoid it by cutting more, right? And when he was asked whether the free money is gonna return soon, he said no. And when he said that, the market dumped. Why? Because the market is addicted to free money. The market relies on printing. So, let's see what the bond market did. This is the 10-year yield. Initially, it dumped, right? Quite obvious. But then what happened? As Powell was speaking, the yields of the 10-year actually went up. They went positive, which is not great, guys. Let me tell you why. This is the 3-month yield. It dumped and it stayed down during the pressure. Okay? So the short term actually went up. The long term went up, the rates. And the short term rates went down. What does that tell us? Worries about inflation reigniting. Don't forget, the bond market is the smartest market, in my opinion. So, what the bond market said here, by pumping the yields of the long curve and smashing down the short ones, is that they believe, the bond market believes that inflation could reignite. Okay? And this is a very big concern because that could be stagflationary. Okay? So, in any case, commodities also went down. They first went up, but then they went down. So the market was sending mixed signals because commodities going down means that the market was pricing in a soft landing. Okay, the bond market was pricing a hard landing, but the commodities market was pricing a soft landing. So it was mixed, and that's what I'm telling you guys. The first day, you can't really get any clarity from the markets itself, and you always have to look at the big picture. For example, the bond market, the commodities market, the equities market, the forex market, right? And today the commodities are rebounding, right? And the markets are also rebounding. But this could be due to the overreaction of yesterday. And for example, if we look at the dollar, just quickly look at the dollar, we saw initial dump on the rate cut, which is expected, right? But then what happened? It went positive, right? Gold dump, euro dump, it went positive. The dollar went positive. Why? Because the dollar, in times of stress, is a safe haven. Because it's the reserve currency of the whole world. Okay, so essentially, if we see worries, if we see a correction, I would expect the dollar to go up. Okay, I would expect the dollar to go up, as weird as it may sound, since a cut would be bearish for the dollar. But in times of stress, where do you think people are gonna go? Surely commodities, but then again the dollar. Okay, so this is what we're seeing right now. And the next big catalyst actually is on Friday. Well, today we have the unemployment claims, but really who cares about that? Like, we do care, but it's not like the biggest catalyst. Okay, we also have existing home sales. It's gonna give us some insight about what's happening, but then again, I think the big one is on Friday. Bank of Japan. Monetary policy. So, remember the carry trade, guys? The story's not over. The story's not over. And I think the Fed might use this opportunity that the Fed gave them to actually raise rates. And people are not expecting them to raise rates. But what if they do? What if they do raise rate? This is a big concern. Okay? So don't forget to watch the yen. I mean, the yen from its lows to the highs, like 12% up compared to the dollar. So the dollar went down by 11%. So even if, in conclusion, even if it could be bullish in the short term, and bearish for the dollar, in the mid to long term, I do believe that this 50 basis point cut is telling us that the market is full. Okay, so I do believe that in the mid to long term we could expect some volatility, and essentially the market acknowledges the aggressive cuts that are coming, but it's worried about the future at the same time, right? What is going to happen next? What is the next catalyst? And this opens the door to hard landing, right? So essentially the Fed declared victory on inflation, which is bad. This is it, guys. See you in the next one. If you have any questions, let me know in the comments. Don't forget to like and subscribe to the video so that you can see everything before the guys on Twitter do. Okay, see you guys.